Hello and welcome to Morningstar. After suffering in May and June, gold prices reached last week their highest in about 2 months, driven by US dollar's weakness and a growing expectation that the Federal Reserve would conclude its aggressive rate hiking cycle. To explore the perspectives of gold and precious metals, today I'm joined by Imaru Casanova, portfolio manager at VanEck. So, Imaru, we saw a bullish gold market between November 2022 and April 2023, as investors were looking for a safe haven against inflation and a possible recession in the US. Let's start from there. What are your predictions today regarding inflation, the Fed's monetary policy, and a possible economic slowdown?
Hi, yes, all of those factors did support gold earlier this year and continue to provide support for gold. We had a meeting yesterday where the Fed announced another 25 basis points, raising rates even higher here in the US. The expectation is obviously that the Fed is getting near the end of its tightening cycle, and I think that should be positive for gold. Whether it's another 25 basis points in the next meeting is still to be seen, but it is pretty clear that the Fed is near the end. And Chairman Powell's comments sort of seem to indicate that as well yesterday. Regarding inflation, clearly it has come down quite significantly in recent months. We still remain concerned that it will be sticky and above the Fed target for more than maybe markets are expecting. It looks like Chairman Powell is also concerned about inflation, and that's why he's hesitant to be too firm on what the path of the Fed will be. Regarding economic slowdown or recession, I think the chances are that we will at least see a global slowdown, but it is likely that the economy will enter a recession here in the US and in other parts of the world. And this is also gold positive, of course.
Right. And so in light of all this, what is your outlook for precious metals and gold in particular?
We think this is a very constructive environment for gold. We have been near the all-time highs of 2075 already this year, getting pretty close to it. We see that all-time high well within reach. And we see factors supporting gold trending higher in the longer term. Of course, there is a lot of financial instability in the system caused by increased interest rates, which will probably stay high for some time. Chairman Powell was also clear to say that they do not expect rate cuts in 2023. We also have a war still ongoing, which creates a lot of instability and is supportive of gold. And we still have central banks buying. Central banks have been buying gold for the past 13 years. They bought gold in record levels in 2022, and we continue to see that strength in buying in 23. So that's also providing a lot of support for gold prices. But longer term, we see all of these factors, a potential, obviously, pause by the Fed as supporting gold prices going forward, and the comeback of investment demand. This is important to remember. This level of gold prices we're seeing here has not yet seen investment demand pick up. When investors do come back in full force, that should be very positive for gold prices.
Right. Finally, gold miners' stocks have been underperforming gold spot prices lately. What are the reasons for this? And what would you recommend to investors interested in gold between these two options? So gold miners' stocks on one hand and a pure spot commodity play on the other hand?
That's a great question, and one that we get asked often. Gold, once you decide you should make an allocation to gold, and we recommend that any portfolio should have some exposure to gold, then the next question is, do you invest in the gold miners or do you invest in gold? You're right, gold miners have been lagging gold for several years now, and that's an important reason to, when you're considering an allocation to the gold sector, to really look closely at the gold miners. We expect that gap to close, which should lead to the stocks outperforming gold. It typically takes a rising gold price environment. And you ask, why are miners underperforming gold? It looks like the market is fixated in gold prices trending to all-time highs as far as gold price go, before they really shift the attention to the gold miners. But in fact, the gold miners fundamentally are in the best shape they've ever been. They producing a lot of cash, not just at 1950 or 2000 gold, but at much lower prices, considering that all-in sustaining cost, the cost figure that we use to measure cost of production, it's on average about 1,300. So these miners are fundamentally in good shape with good balance sheets, producing a lot of cash, paying dividends, and are lagging historically relative to this sector and to gold. So we see a good opportunity for a re-rating here.
Very interesting. Thanks a lot to Imaru Casanova. For Morningstar, I'm Valerio Baselli. Thanks for watching.